Hey everyone, John Inner here, and today on the market psychology video, we're going to be taking a look at the S&P and some really interesting movement. Now, overall, we ended the day yesterday with a very obvious range. Yesterday really didn't accomplish much in terms of movement. We had a big drop off the highs, and then nothing, right? We really didn't go anywhere. We just ended up getting stuck in this range. And notably, one other thing to keep in mind, at the end of the day, we also had a nice bull leg to the upside. So that information is very important because when we opened up today, we opened up directly on those range lows that we were talking about. And we also opened up breaking out of that upside move that we saw at the end of the day. So that's telling us a couple things. This is going to be seen as a breakout move, right? We have a bull channel working higher and they open up all the way down here. Well, wait a minute, that's not right. That should have kept going higher. So if that breaks out down here, there are going to be a lot of buyers that are seeing this as potentially cheap pricing to drive that market up. And we get this gargantuan bull candle to start the day off. But this is where the clues start setting in. Not only are they buying off of the range lows, but look what happened afterward. The very next candle, absolutely no follow through. That is not what you want to see after a huge candle like this. You want to see a big candle and then another one of those, and then maybe another one, and then another one. You want to see them keep going if that's going to be a strong upward move. And it wasn't. There are going to be a lot of buyers that bought into that, expecting that huge move up, and they immediately were on the wrong side. It went in their direction by about a point before coming back down against them, and it couldn't even close past their entry point before hitting that earlier channel and turning right back down again with strong bearish sentiment. So this is a beautiful place to look to become a seller, knowing that there are a lot of buyers that are stuck in this move. And the obvious place that we should be going in terms of a range aspect, sell the high of a range, looking back down to the lows of that range. And we also know that any buyer who got in here, they've got their stops right down here. So there could potentially be a stop run on that low to drive the market even farther. So a gorgeous reason to become a seller. We drive that price all the way back down, hits those lows. The buyers tried defending it with everything they've got, and it breaks down and it causes a big stop run. That's exactly what we were expecting. With that big move down, you can see all of that wick. They tried to finish up the move. Now we're low on the range. We've gotten the stop run on the bottom. Now we can start looking to become buyers once again. This is where a lot of people have trouble on these range type days because they see this kind of move and they want to sell along with it. And there are going to be a lot of sellers that get stuck in that move right there only to get their face ripped off when it goes back against them because they're trading against the trend, which in this case is a non-trend. It's a range, right? So we're looking to be buyers down here on the range to drive the market higher. We see the buyers come in the first time right here, and we really don't want to be the first one to this party, right? That's a very strong move down, and even though this is a range, I'm not going to be the one that tries to call the bottom. But then we have sellers come in, they get stuck, we know their stops are above those highs, and we turn into a huge bull candle. That is a gorgeous reason to become a buyer right back up again. So that's how you play a range on this type of scenario. Let the breakouts take place. There will be breakouts. They're probably not going to hold for very long, but there will be breakouts. So be careful of those. Wait for the wrong side traders to get stuck in the move and then pounce on it, jump on it, because you know their stops are going to fuel a big move up or a big move down or both. And you can ride out both moves in both directions and have a very nice day. So beautiful combination of technical analysis with market psychology, telling you exactly when to get out and in for some gorgeous moves. So hopefully you learned something. Hopefully you found it useful and interesting, and we will see you next time.